it will allow this field, this portion of the field, to be, for the production to extend another 10 to 15 years. So it's a really big, important part of, the step forward for us. There's a lot of barrels there. They're very profitable, and so we need to get after it with our partner.
Hello, you're watching Proact. I'm joined by Paul Welch, the CEO of Buccaneer Energy. Paul, this acquisition lifts Buccaneer's production to around 155 barrels a day. How meaningful is that step up in terms of cash flow and the company's near-term growth?
Oh, it's significant. So at current prices, which are elevated from where they have been, this asset throws off net to us $50,000 a month in free cash. So it's a substantial step up in cash for us. It's a very good addition because reason being is the operating costs in this part of the field are very low. So our OpEx per barrel is about $6, a little over $6. So we get a tremendous net back from this well. So it was a really good addition to our portfolio.
Paul, you've pointed out that the company's market cap is about £1.5 million sterling, while your reserve yet value is significantly higher. Why do you think that valuation gap exists, and how do you plan to close it?
Well, I think I wish I knew the answer to why it was so different, but I think we're focused on closing it just through our approach to generate cash flow, get our message out. We think it's incredibly low. It's even lower now than it has been. Back in the last year, late last year, we drilled a dry hole Carlisle-1, and we had to kind of tilt our strategy as a result of that. So I think people need to get their heads around what we're doing, in generating cash flow, starting this water flood in the Falk area. This well is kind of the first step in that direction, allowing us to capture more of that value. So it'll take a little bit of time, but that's what we're working on. Again, just generating cash, and getting the message out as to how we've changed the business.
The Carlisle-1 well also takes your interest in the proposed Falk water flood to more than 50%, Paul. How important is that project to unlocking the bigger reserve potential in the field?
It's really important. So the well that we just picked up, the Carlisle well on primary, so before we start the water flood, has about another 50 to 60,000 barrels left. When we look at what it'll do under water flood, it's almost another 250,000 barrels. So it's a super important part of the development here. It will allow this field, this portion of the field, to be, for the production to extend another 10 to 15 years. So it's a really big, important part of, the step forward for us. There's a lot of barrels there. They're very profitable, and so we need to get after it with our partner.
With a projected payout period of about 9 months, what's the next operational milestones investors should watch out for as you look to build production from Pine Mills?
Yeah, I think I think there's going to be two things. Firstly, we're going to do another round of the organic oil recovery, which we haven't talked about at all. So we're gonna do another treatment in mid-April, and we'll see what that does. If we further extend our increase in production from that, and then we'll expand that field wide if we do see that working. And then secondarily, we'll start up the Falk water flood, which is looking to be sometime around mid-year. So those are the two things we're working on. The two next steps we expect, and again, revenues are up significantly because of the change in oil price. So we'll report out a revenue stream which will be substantially up from where it has been.
Well, I hope you'll continue to keep us updated on your progress. Thanks very much for speaking with us today.
All right, thanks for having me on. Good to speak to you, Stephen.
And you, Paul Welch, CEO of Buccaneer Energy.